would sell gold. I mean, it depends on your situation, but look, there aren't very many opportunities where you can get an asset that has this kind of upside potential with such muted downside potential that is being accumulated by, the biggest money in the world. In some respects, it already is. It just hasn't, the monetary aspect of gold is what has been agreed upon by, you know, by by the central banks. But from a strategic standpoint, you could argue silver is just as valuable, and maybe that's why you see these eight Western banks that have gone to such great lengths to suppress the paper price. But then again, you're seeing massive deliveries as well on COMEX, and when you see the open interest just fall by 10% yesterday, that signals that typically, to me, that signals that these contracts are getting closed out and are preparing to stand for delivery. So when there is a short, the long on the other side has the ability to stand for delivery. And when you see on the first day like that, it just massive drop in open interest. That to me are contracts that will stand for delivery. And again, we saw a huge delivery. What did I say on that number? Huge delivery that we just saw. What was the number here? Um, 14,813 contracts. It's the second highest ever. And if we multiply that times 5,000, well, that's 7 million 400 and no, is that 74 million? That's 74 million ounces of silver. 74 million, one, two, three, one, two, yeah, 74 million, 65,000 ounces of silver stood for delivery just like that. And I think you're going to start to see silver leave the COMEX exchanges as well. And that's when you'll realize that this is getting really serious. But, you know, this is a trend that hasn't stopped. We've seen more imports of gold into this country and to a lesser degree silver than at any time since the end of World War II, when everyone sent us their gold because of the Bretton Woods deal. So it's not just gold, it's also silver. And I think the people at the highest levels understand silver. There's a race to secure it, and I think they understand that it is strategic. It's not tier one, so it doesn't have the same implications that gold does for the Basel III regulations. But when you see Russia and India and China and all of these countries on a mad dash for it, I think that people in the United States who are making the policy understand that as well, and that's why you're seeing so much brought into the country from London and from Switzerland. I would sell gold. I mean, it depends on your situation, but look, there aren't very many opportunities where you can get an asset that has this kind of upside potential with such muted downside potential that is being accumulated by, the biggest money in the world. So yeah, I think that if it were me, I would probably sell gold. In fact, I know I would. But to me, silver is something that has been frustrating, but you can't run away from mathematics. You can't run away from that kind of logic. The old saying I keep saying, the market can and will stay irrational longer than you can stay solvent. The people that have been playing this game with the futures market are very powerful. You're talking the biggest banks in the world, probably by direction of the federal government or the military industrial complex. The red line would be the four biggest commercial banks, and the green line, the eight largest. So the four is inside of that
Hmm.
green. But why would you have silver, this tiny little market, having the largest concentrated short position? I mean, and that's concentration. Look at crude oil, and you see where oil is right now. I mean,
It's
oil went to
way
-40.
over on the left-hand side. Yeah, he
Yeah.
said gold. You look at the gold, platinum, silver, and palladium have been nailed to the right-hand side of this chart. In other words, the most days of global production short by concentrated bullion banks
Right.
on the COMEX market.
And I think you have to ask yourself why. Why the hell would they do that? At the same time, China, the second largest producer in the world, is flying all around the world buying doré and concentrate. Russia makes a public announcement that they're adding it to their stockpile. India's bought 800-900 million ounces in the last 5 years. And of course, um, this is something that's not stopping. And now the United States is importing it. But why would you have eight banks with that kind of a short position? There's something, that's very strategic about it. But that works when you don't have much of, these much of the world standing for delivery. And you do now. So that's kind of why I think you're seeing the volatility. That's why you're seeing huge deliveries. That's why you're seeing massive imports because this is getting real. And you don't want to be on the wrong side of a failure to deliver one of these large banks. I guess we'll have to see. But if it were me, I'd sell gold for that reason. You could argue it's a generational trade. I mean, it's once in a generation trade, and I hope people take me seriously on that. I mean, there are very few things I've ever seen where I can say to you, well, if all we do is hit 150-year averages, you'll double your money. And you know, that's something that you don't see very often. I don't know. I would simply say to you, it's as good of a trade as you will ever see in terms of risk versus reward, especially if it's in an IRA, because if it's in an IRA, you're not going to have any tax issues or shipping issues. Um, that would be the way to do it. But yeah, I mean, logic would say absolutely do it. And if all that we see, goes back to 42, 45 to 1, it's a double. It's coming out of the ground at 7 to 1. So, you see it go to 30 to 1, which I think is very possible. You're tripling your gold almost. 150 years is the chart that I looked at, and it had only touched 100 twice, once almost, but twice or three times in the last 150 years.
Wow.
And every time it's anywhere near 100 to 1, the ratio falls back quickly. I mean, it just always has. And yes, you're right. It does have that historical catch-up pattern where it continuously lags behind gold in as gold makes its bull move, but then typically will dramatically catch up and outperform gold on a percentage basis. Anytime you get near 80 to 1, Ivan, it's a sell signal for gold and a buy signal for silver or an exchange. You go back, 5,000 years and the ratio geologically was 16 to 1 for almost all of humanity. And now it's 7 to 1, as Keith Neumeyer will tell you. It's depleting in nature. It's
Right.
found in like your skin is epidermis. It's found in nature in a form called epithermal, right near the surface. Big deposits have been exploited years ago, and so if you have a 16 to 1 geologic ratio for most of human history that has now fallen to 7 to 1 because it is the easy stuff has been scooped up. The price average has been 40-ish to 1 for the last 200 years, largely because of gold's role as money and silver in an industrial capacity. That's man's ratio. God's ratio said 16 to 1, falling to 7 to 1. Man's ratio for the last 200 years has averaged about 42 to 1,
Right.
and now it's 100 plus to 1. This is an opportunity you do not see but one or two times in an investing career. Look, I'm taking my gold salesman glasses off, and man to man, I would tell you that um, it's the opportunity of a generation. It truly is. And when you see the amount of concentrated short positions that seem to be unwinding in both London and in COMEX, the United States, because being naked short when there's this kind of global demand coming out of China, who's flying all around the world buying up doré and concentrate, in particular Peru and Latin America, paying double what the West will, sending it back to China for refining as the second largest producer of silver in the world. And
Right.
India buying north of 850, 900 million ounces over the last 4 or 5 years, and Russia adding it to their strategic stockpile. I don't ever remember a country doing that. And massive deliveries coming into the US and the LBMA going from T+1 settlement to T+8 weeks because there's a shortage of trucks.
Wow.
Shit's breaking everywhere and
Right.
things are happening everywhere, Ivan. And these distortions that you see only magnify the final outcome. But anytime in history you go back, you're anywhere near 80 to 1, let alone 100 to 1, you're near that reversal, that catch up that you speak of. Um, and I would say there are very few times in history, in my lifetime or in anyone investing lifetime, where you can buy something that is that severely depressed based upon historical averages going all the way back, whether it be ratios between gold and silver or just, logic would dictate that selling at these prices compared to where it was in 1980. I can't think of too many things that you can buy at a 40% discount to its 1980 price that has expanded massively in its uses. Things are breaking. And I think you could argue if you have gold, this is the time to trade it to silver. You don't get opportunities like this very often. I think the mistake that the crowd that jumped on following the craziness back to 2021, that were following you guys and following the Reddit crowd and following the silver squeeze and right on the heels of GameStop and AMC, is that you don't want to buy gold and silver to become wealthy, as
Right.
oxymoronic as that sounds. It is wealth. It's wealth that's outlived everything the world's ever thrown at it, from world wars to hyperinflation to Great Depressions to pandemics to everything. And the most well-informed traders in the world now, after being mentioned hundreds of times in the Bible, going all the way back, here we are, the biggest money in the world quietly is accumulating it hand over fist. And forget about the price. The price is distorted, period. It's distorted because on the LBMA, they can have a float of 260 million ounces, but trade 2.9 billion ounces per day. That's 3.5 times annual global mine supply.
That's
We're
crazy.
on COMEX, where the contracts are rehypothecated, I don't know, 2,000%, 20 times the amount of contracts than bars. And that's what the Hunt brothers noticed in 1980. It's the same situation. But now you have countries that are motivated and coordinated and sophisticated and wealthy and standing for delivery. So, you will make a lot of money potentially when silver finally exerts itself, but that's not why you buy it. And that, I think, was one of the mistakes that the crowd made and got, disenchanted with silver. Because if you've been following silver long enough, I've been doing this for 35 years, and just in your short 4 or 5 years that you've been doing this, I'm sure you've seen how crazy it can be, how it can, turn you gray or make you wonder how the hell are things so counterintuitive. And that's what happens when you have a half a dozen commercial banks that control the largest short position of any commodity traded on
Oh
COMEX.
yeah.
The bigger question is why. And I do think that the guys at silverwars.org or whatever it is did a great job of documenting the amount of silver that goes into the military industrial complex. And although they don't really post those numbers anymore in the Silver Institute, that is why they've been suppressing silver. But the only way you can suppress a market over an extended period of time or manipulate one is to push it in the direction it's going. And now you have a whole massive amount of high-powered sovereign wealth funds and countries that are challenging this, standing for delivery, using the suppressed price to their advantage. So I would
Right.
say you buy gold and silver because it's wealth, number one, first and foremost. You buy it to get out of the system, a system which is breaking on multiple levels. But you don't buy it with the intention of getting wealthy, and you might, and you probably will if you hold silver, which to me is the opportunity of a generation. But you buy it because it is wealth, and if you understand that, then you're not pissed off when things don't quite go the way that you expect, as markets, as the saying goes, can stay irrational longer than we can stay solvent. And I will just simply tell you that I don't think there's an asset on the planet that offers the kind of potential that silver does, with the lack of downside risk. Call that asymmetrical. The asymmetrical risk reward, silver to gold. I mean, silver potential to risk is off the charts in your favor. And
Right.
the best advice I was ever given, I was 19 years old when I started this company, and I tell this story all the time. My dad told me, make, only one rule when we start this company, and that's that you'll buy something every 2 weeks. And back then it
Yeah.
was silver. I didn't have any money. And although gold was, $300 or less, you could buy a 10th ounce eagle back then for $40 or whatever. So, but the point of it is, I did every 2 weeks, and I've owned the company all right for 2 decades, but I have honored my promise to my father, and I have purchased something every 2 weeks for over 35 years. It is the best gift I've ever been given, Ivan. It is the best advice I've ever been given,
Wow.
ever. And that is to pay yourself first, because I was 19 yesterday and now I'm 44 and I'm 54 and I don't know where the hell time went.
Yeah.
And that'll happen to all of us, God willing. Father Time catches you, but you look back and say, "Holy crap, how the hell did all that time go by?" To let the laws of compounding work in your favor rather than against you, as everyone else says, is everyone else is always working against, or is a having the laws of compounding working against them. Turn the table and have it work in your favor. And it doesn't have to always be compounding of interest. It could be compounding of time. In this case, the accumulation, steady, slow accumulation. I don't care if it's an ounce of silver, whatever it is, every 2 weeks when you get paid, or every month, whenever it is, you pay yourself first. Because if you could have a conversation with your 54-year-old self when you're 19, I can guarantee you that 54-year-old would say, "Dude, life gets expensive. You got kids and weddings and college educations, and you want to have a life and think of retirement at some point. So start paying yourself first."
Wow.
It's just like anything, working out, anything. You have to be regimented and monotonous and stick with it. Monotonous isn't the right word. Regimented and methodical is what I meant to say.
Right.
And it's the best advice, the best gift my father ever gave me, the best advice I've ever been given. And so for young people, pay yourself first. You won't be young forever.